Canada just saw the biggest run-up in house prices that we've ever seen in a spring market, growing almost 20% from January until May of 2023. The only time we've seen a comparable strength in the spring market was this time last year in 2022, and we know how that ended. Usually when you see prices run up that consistently, it's typically followed by a pretty steep downtrend thereafter. This is what happened in 2017 in Canada, in 2016 in Vancouver, and in 2022, coast to coast. If you're a homeowner and you feel like you've missed your shot and now you're seeing a flood of supply heading into the Canadian real estate market, you're probably wondering, should I sell now or should I wait until later? And combining this whole phenomenon with the financial stress that we're starting to see as a result of the Bank of Canada's interest rate hikes has a lot of people asking this very question. Welcome back to my YouTube channel. My name is Daniel Foch. I'm a real estate broker and analyst in the Greater Toronto Area, and I try and cover topics that are pertinent to real estate investors. We're going to fully examine the economics and even talk a little bit about portfolio strategy and almost stock market trading strategy to look at what the buy, hold, and sell scenarios would look like if you are a homeowner who is in the position where you're contemplating selling a property at a loss. You might be one of two people. You might be a homeowner or an investor who bought a second property, and now as a result of financial stress, inflation, or changes in the interest rate environment, the investment just isn't serving you the way that it used to. You bought the house as an investment to generate one of two things, or perhaps both: cash flow and equity through capital appreciation. If the cash flow element is being jeopardized by inflation, the costs of your expenses on the property accelerating, or interest rates, which is the cost of capital or borrowing money on that property, then it might be actually costing you money to hold that property on a month-over-month basis rather than making you money or being cash flow positive. In this position, you're almost plagued with a question that's very difficult to answer. It's, do I want to lose money fast or do I want to lose money slow? Most people actually choose the lose money slow equation because you're basically taking this obligation and spreading it out over a long period of time. I really like to look at this the same way the stock market analyst would look at it. Analysts will provide three different signals when they're rating a stock. Buy signal, which means that you could increase your exposure to the asset. And by choosing to hold the asset, by the way, you are increasing your sunk costs every time you pay the mortgage. Every time you pay interest, that asset costs you more. Every time you pay principal, you're reinvesting money into that asset. So by choosing to hold it, it's technically a buy. So let's call the buy and hold signals the same for the real estate asset, because it's an asset that you don't just buy once, that you buy gradually over time. And then the final piece is the sell. So there are a couple of things to consider when determining whether or not you should sell your property at a loss. Do you need the money? Is the investment impacting you and or your family in a negative way or a positive way? Is this something that is causing you major stress and anxiety? So these are more qualitative facts. Ideally, you want to try and minimize these losses, be them actual real financial losses or tangible qualitative lifestyle losses as a result of holding the property. The other options that you have are perhaps switching your mortgage product. So if you're on a variable rate that is significantly more expensive, you might be thinking, should I lock in a 3-year fix right now? Now that we're heading into a more inflationary environment, more and more people are asking themselves this question, and more people are wondering if it's too late. I would say that timing the interest rate equation is just as hard as timing the real estate market. And if you're in this position, you probably weren't really an expert at timing the real estate market or the rate market. And so asking yourself that question might be the absolute last house on the block if we can't solve the problem in another way. So if you've already determined that you don't want to lose money fast, you don't want to cut your losses and exit as soon as possible, then you've really already made the decision to hold the line and ride it out. And that can look in two different ways. Typically, if we were just using trading strategy, and if you were assuming that if you bought the real estate property just for capital appreciation, from my perspective, you're a speculator and not an investor. And I don't mean that disrespectfully. I think it's worth categorizing yourself that way. A speculator should treat it using stock market psychology. And if your stock trading psychology would say, if you're at a loss, exit that position as soon as possible. If you are a speculator, that might be the best move for you to consider. And this is where the question becomes, can I go from being a speculator to a investor? So let's assume that you have a house that is losing you money, and perhaps it's in a negative equity position because house prices have come down since you purchased it. The first thing you need to do is detach any emotional connection that you have from the asset if we're treating it as an investment. This is obviously a little bit more complicated for owner-occupied home. The next decision that you have to make is whether or not you are a speculator or an investor. Investors are people who buy for investment purposes, yield on properties. Speculators are people who buy for capital appreciation and earn their money from the growth of equity. There's really no right or wrong answer, and a lot of good, complex real estate strategies encompass yield or earnings from both categories. But if you bought the property purely because it was going to go up in value, then you really are more of a speculator than an investor. And if you bought the property purely for cash flow, then you're probably more of an investor than a speculator. I would typically advise somebody who is a speculator to apply stock market or stock trading philosophy to their asset, which is where if you're in a loss position, you should cut that loss as soon as you can. The question is, do you want to become an investor? And can somebody who is or was a speculator transition into being an investor? What does that look like? The policy environment's changing and making it possible for you to add units in most municipalities and provinces across Canada. And so if you're already in a bad position and you have chosen that selling is not the option for you, in a lot of cases, reinvesting in the property, adding to your cash position, adding to your investment in the property is one way to make the investment more compelling. You can do this by cosmetic renovations. You can do this by adding units to the property. You could do this by changing the strategy, perhaps pivoting from a short-term or long-term rental to a short-term rental. There's so many different ways that you can reposition an asset to make it a more compelling investment and pull it away from that speculative earnings stream that is no longer serving you because we're not in a growing market. I've personally done this with some of my investment properties, and I've helped a lot of clients to reposition assets. I have a strong network in contractors, planners, and other individuals needed to fulfill this supply pipeline. So I'm happy to help you should you be in this position and need to either exercise a sale or fix an asset that's no longer serving you properly. I'm fortunate enough to have brought on a realtor recently who specializes in missing middle housing, and together he and I are going to be putting together a lot of content for the missing middle space over the coming weeks. So stay tuned for that. So in summary, we looked at the 3 options that owners have when they're faced with a bad position or an asset that's no longer performing them. They can buy or continue to reinvest in the asset. They can hold the asset, or they can sell the asset, potentially at a loss. As an individual, you need to figure out which one of these you are and whether or not you even actually have the capital to be able to increase your exposure to the asset to try and get yourself out of the position. If not, again, I would apply that trading psychology and say in most cases, it's best to cut losses early. And once again, I'd like to thank you for taking the time to watch this video. I really appreciate you. Once again, I'd like to say thank you for taking the time to watch this video. I really appreciate your attention, and hopefully it's brought some value to you. Please feel free to share this with anybody you know who might be asking themselves the same question. Please leave me a comment, even a very specific one on this topic. I'm happy to advise you in the comment section however I can. And please like and subscribe. I'd really appreciate it. Thanks a lot, and I'll see you next time.